Hello, Las Vegas. My name is Paulin Korensia, and today I have a very, very special guest. This person is gonna have a lot of your burning question answered today, and I'm so excited to introduce this person right here. Please introduce yourself, what you do, and how long you've been in the industry.
Absolutely. Thank you, Pauline. Appreciate it. My name is Dave Gonzalez, and I have been in the industry since 2002. Before that, I was in banking for about 15 years, so I've done the full gamut of finance, and I've been in the mortgage business for quite a while. I've done work for major banks, Wells Fargo, Nevada State Bank, One Nevada Credit Union, and brokers, mortgage bankers, etc. So I've had every type of loan put in front of me. So I'm familiar with a lot of the programs in Las Vegas, and there are some great programs, great loan programs available. I'm with Epic Lending, and we are an in-house lender for Realty One Group. We have over 1,100 loan programs, so we have the loan program to get you into a home and help you build wealth through real estate. That's always been my motto, and it's always what I profess. It's always a good time to start in real estate in Las Vegas. I've been here 47 years, and I've seen the economy go up and down 3 times, so
Wow.
it's always a good idea to jump on board and enjoy the ride because you can do very well in Las Vegas, especially now.
For the people watching at home today, tell us what is the first step of home ownership?
I am so glad you asked me that. You know why?
Why?
Because here's what happens when somebody wants to buy a home. There's a lot of reluctance on a first-time home buyer, and I know why you guys are reluctant, because they don't think they can afford it.
Yes, absolutely.
But you
That's
see,
the biggest one.
You're not the one to answer that question. Talk to a lender. They will let you know. Okay, and here's the other problem is, first time when somebody thinks about buying a house, what's the first thing they do? They call a realtor.
Right.
And the realtor's not going to get you that house. A realtor will
Right.
find you a house, but a lender is going to get you that house.
Yes. So
And
the first step is the lender.
Absolutely. If you're going to talk to a realtor, that's fine, but get with a lender.
Yes.
Okay, and you can choose whatever lender you want. Choose me. And
Okay, that brings to the next question. How do you choose the right lenders for you? Because there's a lot of lenders out there.
Right.
How do you choose the right one for you?
right, and you know what? It's all about comfort. Okay, who are you comfortable with? And I've had clients that I've had to put with certain realtors because they either spoke a different language, you got to find the right realtor, or else they had specific needs and requirements. And I always know how to pair the people up with a successful transaction so that they're happy. Okay, we never want to put them in a fail situation.
Yeah.
We want to make sure they can afford it and they're happy where they are and the process goes smoothly.
Okay.
Because
Wow.
being in the mortgage business, if you're going to try to buy a house, the mortgage process itself can be a challenge, but it is worth it. If you get a good loan officer and a good lender, they will help you through the entire process, and it's not so big a deal.
What are the biggest challenges you've seen so far?
What I've seen so far is buyers' reluctance because A, they're afraid of their credit, and I always tell people, face that credit. Okay, you're going to have to face the monster.
Right.
And a lot of times people are afraid of their credit. But don't worry about that. Let your lender help you through the process.
So lender can actually help clients
Absolutely.
fix their credit.
Yeah.
Wow.
If they're having a problem, now a lot of lenders, they don't want to go through that because a lot of the loan officers don't want to do that. Okay. I'm one of the few that will do that because the one thing I don't want you to do is, and I'm sorry about this, credit repair places, but I don't want you to go to a credit repair place.
Why?
Oh man, am I getting in trouble on this?
No. This is honest.
And there's some really good credit repair places, okay? I know one. And but I've been doing credit for a long time. I've done first-time homebuyer credit seminars, and I've helped people in very bad situations get their credit fixed and buy a home. The problem is when I see people go to a credit repair place, they're going to fix your credit. Usually the first thing they do is file a dispute on your credit. And here's the problem with disputes on your credit. The first time you file it, your credit drops. And then when the credit repair place goes to fix it, and once it's fixed after like 6 months, and remember every month they're charging you for that credit
Right.
repair service, right?
Yes.
Then when they take the dispute off, your credit can drop again.
Wow.
So it's a double whammy. And a lot of
Right.
people don't know that. What the credit bureaus do, TransUnion, Equifax, Experian,
Right.
is they look, and if somebody files a dispute, that tells the credit bureaus, those 3 people, that a creditor and a payee, a payee is not getting along. And they don't care the situation. All they know is it's going to affect your credit.
Right.
Okay.
Right,
And
yes.
so it drops it.
Wow.
Okay. But once it's fixed, so that's why I've always been told it's better for the customer to go directly to that creditor and
Right, absolutely.
work it out.
Yeah.
Don't go to the credit
To the
bureaus 'cause
middleman.
it'll hurt you.
Yeah.
And getting back to the credit repair places, in my opinion, what's the incentive of a credit repair place wanting to fix your credit really fast? You know, because you're going to stop paying them.
That's right.
Once it's
Yeah.
fixed. So what's the motivation?
Yeah, that's a great question.
And
Yeah.
I've done credit, and I can look at a credit report and say it's going to take you this long to fix it, and this is what you have to do.
Right.
And as long as people follow that, and I've had people come back to me a year later and say, "I did what you wanted. I'm good," and they could buy a house.
Wow.
But most credit is not that bad. A lot of times, credit can be fixed in about 90 days to 6 months.
I'm curious now, we're talking about credit a lot, and so how much importance that is in buying a home?
I'm so glad you asked that because I was going to segue into that. My process of approving a buyer is 3 steps. I call it CIA, okay? And it's not Christians in Action. It's credit, income, and assets.
Oh.
The first step is credit. Your lender has to look at your credit. And I can look at a credit report and I can tell you if that's going to be a good one or a bad one. And if it's not good, then I'll send you an email with an update and we work on the next steps. Okay, but credit, income, and assets. Once we get the credit done, then we go to assets. To income. And once the income is done, and income is like you got to be on the same job for 2 years with good experience and moving up and you're making money.
Right.
Okay?
What about if people who are 1099?
That's fine. Self-employed is fine.
Yes.
You know, as long as they're in the business 2 years,
Okay.
we're good. You know, we run everything through Fannie Mae, Freddie Mac underwriting system. And in some situations, if they've got experience in that industry, we can get away with 1 set of tax returns, 1 year set of tax returns, instead of 2 years.
Right.
But everything's a case-by-case basis, and that's how the income works on self-employed. And I've done a lot of self-employed borrowers, so it's not a big deal. And they shouldn't
The
be worried about
asset.
that. Right, the assets, first off, no cash. You can't finance a property using cash. Okay, so if you have like mattress money or something like that, yeah, I would suggest you live off that and let your paychecks go into your checking accounts so the lender can see that. Yeah.
So what does the lender care most about on those multi-step process? Is it the credit or is it having the consistent history of stable income?
It's like a 3-legged stool.
Oh, okay.
And if you're missing one,
It's going to be wobble.
It just doesn't work.
Okay.
So all 3 have to be in place and all 3 have to have a passing grade in one way or another. Now there are exceptions that can be made, like an FHA, which is a government loan.
Yeah.
They have this thing called compensating factors. If a buyer, has had like a death in the family or loss of income because of work or something like that, and they're getting back to work, they'll find a way to allow them to buy a house based on compensating factors that they had a bad situation happen, as long as they've reestablished themselves.
Wow,
Okay.
there's a lot of consideration in
Yeah,
that.
there's a lot of things the lender will look at, especially when they
Yeah.
take an application.
Right.
And it's finding the right product, because on conventional, they're not as lenient.
Yeah.
That's why FHA is nicer for first-time home buyers. And I'm not just pushing FHA because conventional is great too, and there's a lot of
Right.
differences. I could talk forever on this, but I know you don't have a lot of time.
Yeah,
So we
and
can
that
move
is
on.
so resourceful knowledge to have, especially the market has a lot of noise. That leads to the next question. Tell us more about the down payment assistance program.
Down payment assistance, there's a variety of programs in Nevada. One of my favorites is Home is Possible, and that's done through Nevada Housing.
So it's state specific.
Well, pretty much, yeah.
Okay.
Yeah, and that one has some great programs. Workers Advantage for people in different fields. They'll provide you. In fact, I'm doing one right now for a medical assistant, and they're getting $20,000 in down payment assistance, and the interest rate on the program they're choosing is 5.25.
Wow, very sweet.
Which right now the
yeah.
rates are for anybody else is 6.5, 7%.
So, yeah.
So it's a good program.
So are those only qualify for the healthcare workers?
No, there's other programs that Nevada Housing offers first-time homebuyer programs, regular home is possible programs for people that are not first-time homebuyers, and teachers. And for teachers, veterans, they have different loan programs for that. It all depends on what's going to be the best fit for the buyer.
Right.
And that's what we look for. How are we going to be able to help them afford this home with the least amount of money that they can put down?
Wow.
And FHA has two other programs that are really nice, Buyer's Choice and Buyer Select. Those programs will offer 3.5% to 5% of the purchase price for down payment assistance, which is huge.
Yeah,
In fact, we had one close about a month or so ago, and they actually got their earnest money back because of all the assistance that was there, the seller contributions, which the realtors are going to get, right?
Yeah. So walk us through the process of underwriting. Like what's the timeline from start to finish?
Here's what happens. Let's take me for instance.
Yeah.
Once I get a file, I do my CIA thing.
The CIA, yes.
I send it to my assistant. My assistant gathers all the documents that I've sent her, and she'll get more of whatever she needs. She prepares the file, sends it to a processor. Processor prepares it for the underwriter. Once it goes into contract, we've satisfied all 6 requirements to make a complete full application. And usually it's a property address we're missing. Now what we do is we send initial disclosures, which are the first disclosures that we send out showing the loan estimate and how much it's going to cost.
Right.
And it's just a rough draft.
Yes.
Because things will change once we get all the fees and everything. And then once it goes, are you sure you want to hear all this?
No, yeah, it's very informative.
And once we get the file to underwriting,
yes,
processor sends it there. The underwriter does what they call their initial underwrite. And they get conditional loan approval, which satisfies one of the conditions on the purchase agreement, the contract.
The contract, okay.
Okay, because the realtor's going to get a certain number of days for the lender to make sure they got a good loan.
It's a contingency period, yeah.
Right. And then from there, they're going to follow up and get the appraisal done. And they can't start the appraisal until that borrower sends us back their initial disclosure signed, because in that disclosure, there's a form called intent to proceed. We must have that.
Yeah, letter of intent.
Knowing they're going to do that. Now, if I can stop you here real quick.
Yes.
I want to make a distinction between the loan application and your purchase agreement. As a realtor, you're going to make up a purchase agreement, and that purchase agreement is a legal document.
Yes.
I mean, that's a contract between a buyer and a seller.
Correct, yes.
And I have to make that distinction to the borrowers because they need to understand what we're doing is not a contract.
Completely separate, yeah.
No, it's not a contract. It's an application. We're going to decide if we want to lend you $300,000, $500,000.
Right.
And you're only going to put down how much? 3.5%? Well, guess who's paying the rest of the 96.5%? The lender.
Correct.
So, of course, the lender must vet out the buyer to make sure that they're going to pay that. And then we're going to lend it out for 30 years.
Right, yeah.
So would you do that for your family member? Lend them money and tell them, you got 30 years.
A bit risky.
See?
Yeah.
So anyway, that's the difference. Is one's a legal contract,
yeah,
the other one's an application.
Wow, yeah.
And I try to make sure they understand that. And as a realtor and as a lender, we're fiduciaries.
Absolutely.
We have to make sure that we're doing what's right in the best interest of our clients.
Yeah.
Right. Let me keep going about the process itself, because once it goes to final or initial underwrite, the underwriter will send us back a list of conditions, I call them conditions, things that we're required to get from the borrower, from the title company, the seller, whoever. And we get all that stuff done. The appraisal's done. We underwrite the appraisal, and then we send it back. Once we get all that, send it back to the underwriter for what we call final underwrite. And once we get a final approval, then we have some miscellaneous conditions that title has to do, et cetera, that are minor. And we get what we call a CTC. That's CTC, clear to close.
Ah, bingo. That's the buzzword there.
Which I'm getting today, thank you.
Oh, yay!
And once you get a clear to close, then you can order docs and get docs to title, and your realtor will set up a signing date with you. And then you sign your documents. Then we fund your buyer. They send their money to title. We send our money, and then we fund, and then we record, and then you hand over keys. Yeah,
it's like both sides works in harmony.
And as a realtor and buyers and borrowers, I want to make one thing really, really clear. Don't buy the car before the house, and don't buy anything or open credit or anything like that until that deal is closed and you have keys in hands.
Yes.
Then you can go to RC Willey or wherever else.
Any dealership you want.
Don't do that beforehand.
Yes.
Yeah. I have a whole list I have a flyer that says do's and don'ts and a checklist of what we need up front. Unfortunately, that's another thing that scares people from buying a house is I don't know how the process works.
Right.
And that's why, especially with first-time home buyers, I want to go through that up front and tell them this is what to expect, this is how it has to be done. Because a lot of buyers, they'll get down payment assistance, but they don't understand that you have to have money up front.
Yeah,
I mean, as a realtor, you've got to put EMD money down, right?
Yes, absolutely.
Earnest money deposit, that can't come out of down payment assistance. They have to have that up front.
Yes.
And your sellers are going to want like $2,000 to $5,000 in earnest money.
Absolutely,
And
yeah.
unfortunately, the borrowers, sometimes they don't understand that. They also need like $500 to $700 for an appraisal, your inspection. How much does that run?
Yeah, you need a reserves.
Yes, you must have a little bit of reserves.
Yeah.
Now, you may get that back depending on the loan program you choose.
So that leads to my next question. I'm
Yes.
really curious if during those process someone got rejected from the loan application, what happens next?
Well, that depends on the situation as well. If somebody gets declined,
Yeah, let's say Epic cannot fund this deal.
oh, forget it. We're going to fund it. We'll find a way. No, sometimes that happens.
Yeah.
You know, that for various reasons, credit score is too low, the income's not high enough. They'll get a decline letter based on information we found on their application. But it doesn't mean they can't apply again. You know, or it doesn't mean that the lender can't restructure the situation. Maybe they can find them another program where it's not as much.
Right.
You know?
So is there any specific time where you can reapply after you've been denied?
No, and many times you want.
Oh.
Yeah, you don't have to wait,
Okay.
for sure. Yep.
Wow. So it's sometimes the knowing that information alone brings so much clarity and understanding. So it makes the process less intimidating.
Absolutely.
Yeah.
Yeah, and I think the most important thing is for people get their credit under control. Check it first. Go to annualcreditreport.com or else go to Credit Karma.
Oh, yeah, that's a good
Sign
one.
up.
Yes.
Annualcreditreport.com is a government-sponsored site, and you can get one free credit report every year from all three bureaus, and you can look at it, and if you have any questions on it, you can take it to your lender and say, hey, how does it look?
Yeah, yeah.
Now, they don't provide a credit score, but they will sell you the credit score. And when I did it, it was like $5, but that was a long time ago. So it's probably about 20 now.
Okay.
But Credit Karma will give you 2 credit scores. And both services are free. There's no charge for that.
So why 2 credit scores?
Why? But Credit Karma only gets Equifax and TransUnion.
I mean, are the same numbers?
Well, they're different numbers. Yeah. But Experian, they like to do their own thing. So you'll have to sign up with Experian, but you don't have to do that.
Yeah, yeah.
2 scores is enough for a lender to see that.
How much reserve someone need to have in their bank account to buy a home in Las Vegas today?
Yeah, and that depends on their situation. I would say, honestly, minimum $3,000.
Oh,
Yeah.
not too bad. I would thought like 10,000.
Yeah, no, $5,000 would really be helpful, but you couple that with a down payment assistance program. And you know, there's a down payment assistance program called the WISH program, and I loved that program, but they just don't raise their income requirements high enough. It's too low.
Wow.
But they had like a 3-to-1 matching.
Yeah, yeah.
So for every dollar you put in, they would match it with $3.
Wow,
Yeah.
your dollar stretch further.
Yeah. So
Wow.
you need to talk to a lender who's willing to look at all the different programs that are out
Absolutely,
there.
yeah.
And that's just the tip of the iceberg. There's so many
Yeah.
other programs out there. And like I said, it depends on the borrower. You want to put them in the right position that's going to give them enough flexibility to where they don't have to work for that house payment every month.
Yeah, it's on their best interest. For military families, for VA loans, what do people need to know before they apply for one or is preparing for buying?
The VA mortgage process can be a little different, okay, because they're vets. But I'll tell you what, the VA, they really take care of vets.
So how different is it?
Well, the VA has what they call a funding fee for military users, and it's different based on if your VA loan the first time or second time. But it can be like 3.5% of the loan amount, and it gets added onto your loan, so it gets financed. But if you're a disabled vet, you're exempt from that. You don't have to have that. You don't have to pay that. Vets, they used to say 100% financing back in the day when I was younger, a long time ago.
Is it true?
Yes.
Oh, wow.
Yeah,
is it still true today?
Yeah, and the veteran still has some closing costs that they are responsible for.
Right.
Not all of them, because they're not allowed to pay for certain fees. But nowadays with seller contributions, I mean, even they can get their earnest money back too if they get the right program.
Wow.
And there's down payment assistance programs for them as well.
So you're saying a VA client can absolutely close the home with $0?
Oh yeah, yeah.
Wow, that's
right
very impressive.
program. And I'm doing a loan right now where a person's in Tennessee. She's selling her house to a vet, and it's an assumable loan. So the buyer is a vet, and they're using their VA benefit to buy it. They want to assume that loan because the interest rate's only like 3.5%.
Let's pause for a bit. What does assumable mean?
Assumable means that a person can come in and buy the home and assume the loan that they have and take over payments.
Even though they're not VA related?
Yeah, well, even if they're not VA. Now, they have to understand that the person leaving the house, if the house is worth $500,000 and they only owe $300,000, the new buyer is going to have to figure out a way to pay for that extra $200,000.
The difference.
The equity, absolutely. And that's one of the holdups with a lot of transactions like that when people try to assume, because you've got to pay that seller for their equity.
Yeah.
But she's in a good situation because the new buyers have the money, paying the equity, assuming the loan. Now, those do take time, assumable loan transactions.
How long typically?
Oh, they can take like minimum 65 to 180 days.
Wow.
It depends on the situation, the VA, the lender.
So the planning usually take a year long, or
no, but
preparation?
It can take usually it takes about 90 days.
90 days.
To get an assumable loan done.
Wow.
Okay, but they can take a little longer. But for vets, I love doing VA loans because, I love people that serve our country. So yeah, they do a good job.
So tell us one thing about VA loans that a lot of VA audience at home that may not know.
How much are you paying in rent?
Oh, why is it important?
Because you may be able to use that rent to buy a house and make a mortgage payment. Why pay the owner of that home the rent payment and you get nothing but rent receipts at the end of the year?
Right.
Use that money. Find a lender that can figure out how to put you into a house. And please, this is really important. You may not get the house of your dreams right now, but I'll tell you what, it's a good way to start building wealth through real estate. Get yourself a starter home because it will
compound.
Absolutely.
Yeah.
It'll go up and you'll be in better shape, and then you'll be able to buy another house, rent that house.
Yeah.
That's how you start building wealth.
Yeah.
So that's the first thing you need to do is look at how much they're paying in rent. Talk to a lender, talk to your realtor.
Yes.
Get some information and don't be afraid.
One last question for me personally. I'm really curious.
Sure.
What is the biggest challenge you've seen so far as a lender?
As a lender, come on, you're going to make me pick? There are so many.
There's so many, right?
But I think the biggest challenge is getting to the people and getting them to know that they can buy a house. They need to come and look. Okay, when it comes to that, that's probably our biggest challenge because the first thing they're going to do is go to you.
Yeah, why is that? Why is
when they want to buy a house, they think realtor. They don't think lender.
Not financing first, right?
Right, yeah. And that's putting the cart before the horse. You should always go to your lender first and get that done first. But as far as the other challenges, those are just, that's just the workflow. That's how the mortgage process is. It can be challenging.
Industry.
Yeah, but you've got to get with a lender that can work it all the way through from start to finish. Okay. And when I get a file, I send out an email that's about this long. Wow. And I tell them the entire process, what they've committed to, what the purchase agreement says, that legal document, their dates. I want them to keep that on file and refer to it so they know where they are in the process.
Super detail oriented.
Yeah, you have to be because we're their fiduciaries, so we have to make sure they're on track.
Absolutely, this is our responsibility.
Right, absolutely. So you're looking out for their best interests, and so are we.
Yeah, so it's important to find the peanut butter to my jelly.
That's right.
And also one last question.
Yes.
That was the challenge. So what is your most favorite part about being a lender?
I think my favorite part is when they get their keys, especially a first-time home buyer.
Yeah.
That is so cool. I had one young lady cry, and it was
I can imagine how
it was touching. It was really cool. But she couldn't believe that they handed her keys to a house.
Yeah, it was like
she was in her early
major
20s
milestone.
Yeah, and it was amazing.
Wow, yeah.
And I had one person come back to me. He was going to close. He was going to close in 2 weeks, and he came to me and said, "Dave, I want to put $20,000 down, but I'm afraid I want to take my money out and cancel the deal." And I said, "Aldo, in 1 year, you're going to come back to me and give me a hug." I swear he did, because when he came back, now he had $150,000 in equity.
Wow.
And he said, "I've never had this kind of money."
Best decision ever.
Yeah. So it's about making them feel confident in what they're doing, because it's a good idea. It's always a good time to start building wealth in real estate.
Absolutely. It's been a pleasure to spend this beautiful afternoon with you, David.
Thank you, Paulin.
Such an honor to learn everything about mortgage industry and lending, and such helpful information to have even for myself as a realtor and a homeowner. And I hope you guys enjoyed this video. Thank you so much for watching, and we'll see you in the next episode.
Thank you.
Thank you. Bye.